Hey everyone, Amazon stock is already up 11% year to date here in 2024, which has a lot of investors asking what's going on with Amazon stock. Why is the price up so much? Of course, Amazon is in my list of top 24 stocks to buy right now. If you haven't already seen that video, I'll link to it at the end of this one. So I wanted to dig into these details here and kind of answer and elaborate on what's going on with Amazon stock according to some details that management provided about the business. So let's jump in. Let's see what's going on here.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
All right, so new Amazon CEO who took over for Jeff Bezos, Andrew Jassy, said that in the most recent quarter, their revenue increased by 13% to 170 billion. They generated 13.2 billion in operating income, which is up over 383% year over year. And you can start to understand why investors are excited about Amazon stock. That kind of profit growth is truly impressive, especially at that scale. You're looking at billions of dollars of growth. You see this kind of hundreds of percent increase in profitability, sometimes from smaller companies because it's easier to increase when you're smaller, but rarely do you see this level of operating profitability growth from a company the size of Amazon that generated 170 billion in revenue. And so what's driving that is that Amazon continues to have the broadest retail selection with hundreds of millions of products available, and they added tens of millions of new items last year alone. The more products you have, the more customers are interested in joining your site and browsing your website because they're confident they're going to find what they're looking for. And the more customers join, the more merchants are interested in putting their products on Amazon. And so it's feeding this positive virtuous cycle where merchants want to be on Amazon because there are hundreds of millions of shoppers that visit more and more often and purchase more and more often. And then that makes merchants want to list more items, which then attracts more customers, which then attracts more merchants. And this positive virtuous cycle has grown Amazon into the giant it is today that generated 170 billion in revenue. Additionally, its fulfillment network is best in class and nobody's even close. In 2023, Amazon delivered Prime members at the fastest speeds ever, with more than 7 billion items arriving same or next day. Same or next day. Nobody can match that. The benefit, the reason they've been able to do that is regionalization, where they re-architected their network to store items closer to customers. They established warehouses and delivering facilities closer to customers, and that allowed them to increase the speed of delivery. And we're going to see a little bit later that it added a benefit to Amazon as well. So the other thing that benefit them is the expansion of same-day facilities, where in the US in the fourth quarter, they increased the number of items delivered the same day overnight by more than 65% year over year. So they have separate facilities, one for delivering items in the same day and the other for delivering items next day or sooner, right? The difference here is strategy. You put items in the same day facility that customers order more frequently, that customers want more quickly. You have those kinds of items in that facility. And then in the other facility, you have items that are ordered less frequently. So as Amazon has collected more information on its customers, on their buying habits, their ordering frequency, their time of ordering, the seasonality, all that vital information they've been able to use to now optimize their fulfillment network to better serve customers. And this regionalization effort has also brought transportation distances down, which has helped lower our cost to serve. In 2023, for the first time since 2018, we reduced our cost to serve on a per unit basis globally. In the US alone, the cost to serve was down by 45 cents per unit. This is what I'm really impressed with Amazon focusing in an area that offers a win-win solution. The customers get faster delivery speed. They get their items quicker, which customers really want. It makes them purchase more often if they see that they're going to get their items sooner. Simultaneously, it lowers Amazon's costs and increased profitability because now they're closer to customers, so the distance traveled has lessened and that increases profitability. So it's a win-win solution. Amazon generates more profit per order. The customers get their orders faster. When you find an area like this in a business, you want to invest further, maximize this opportunity to the fullest. You don't want to leave this open. There is rare cases where you can both improve profit per order, per transaction, and also improve the customer value proposition. When you find these rare opportunities as a business, you must maximize this. And that's exactly what Amazon is doing. And as an investor, I would be happy with this strategic move by Amazon management. If I was an Amazon shareholder, which I'm not, I do recommend Amazon stock as one of my top stocks to buy. I do not own Amazon stock myself. However, if I did own Amazon stock, I would be happy with the moves this CEO is making. And it goes to alleviate some concern. Remember when Jeff Bezos, a little while ago, a couple of years ago, said he was stepping down as CEO and replacing with Andy Jassy? Investors were a little concerned, right? Because Amazon had did such a great job under the leadership of Jeff Bezos. Investors were worried about the new CEO coming in. And I have to tell you, so far, I've been impressed with the strategic management decisions that Andy Jassy has been making at Amazon. And to make it even better, the CEO saying, as we look forward to 2024 and beyond, we're not done lowering our cost to serve, highlighting that there's more room to expand on this opportunity, that it's not as if they've reached the limit of that. And he's warning investors saying, don't expect this to continue. We've kind of reached the limit of this opportunity. That's not what he's saying. He's saying, you know what? We're not done doing this. There's still room to go. So that means at least 1 or 2 quarters more of this kind of cost optimization of improvement in profit per order can reasonably be expected from Amazon stock investors. And lastly, advertising. Advertising growth remains strong, up 26% year over year, which is primarily driven by our sponsored ads. Of course, right? If you're a merchant, if you're a business, if you're a marketer, wouldn't you want to advertise on the platform where customers are 1 click away from making a purchase? 1 click away. Arguably, that's the closest you can get to a customer purchase decision, just 1 click away. Amazon has hundreds of millions of customers that have their payment information on file, and they're on the website ready to make a purchase. Of course, that's an attractive place where you want to put an advertisement right next to a purchase. And so Amazon's ad business has grown to rival that of the leaders, right? It's arguably 3rd place in the digital advertising arena behind Alphabet, which is 1st place, Meta Platforms in 2nd place, and Amazon has built itself up there. It's now arguably around 3rd place in that category. That wasn't an easy thing to do. So that's been impressive as well. So hopefully throughout this video, you've seen several factors that are fueling Amazon's stock price increase. It's not based on hype. It's not based on enthusiasm. It's not based on potential, although some of it might be based on potential. Amazon is delivering actual results, revenue increasing, profit increasing, cash flow increasing, improving the business model, improving the customer value proposition, improving economics, unit economics, all of that. And that's why I've been saying that this stock price increase has been justified for Amazon. Now, all that being said, there are still risks. It's not all good news for Amazon. Other e-commerce companies, primarily the China-based e-commerce companies, are entering into the US market and making inroads in offering lower priced items to consumers that are not so focused on getting their items faster. So there are still risks for Amazon. However, overall, I think the risk versus reward is worthwhile, and that's why I've placed Amazon on my list of top stocks to buy. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.